Hey everyone, it's Friday on the Final Bar. We're going to talk about this nice move to the upside after a challenging year and now a challenging start to the new year. We have the major averages moving to the upside. Ladies and gentlemen, this is the Final Bar. Hey everyone, welcome to this Friday edition of the Final Bar. I'm your host, Dave Keller, the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we try to make sense of these markets using the best practices of technical analysis. The technical toolkit is designed to help you navigate uncertain times in the markets. It's designed to help you manage your emotions, make decisions based on the weight of the evidence and the information the market is providing back to you, as opposed to your emotional reaction to different inputs that you might get from the markets or elsewhere. We're going to talk about how today was a little different, right? So far in 2023, we've been sort of languishing. We've been consolidating around that 3,800 level. Really, many of the lows in the last couple of weeks every day have been right around 3,800. Now, today, we actually pushed to the upside. Now, how much of this is short covering? Open question. How much of this is a short-term move versus a long-term move? Open question as well. But I have found that the best thing you can do is focus on the price behavior, focus on key levels to pay attention to. We'll try to help you identify those in our show today. Now, we have great guests on the show. We're so fortunate with some of the great conversations we're able to have. And I want to highlight just a couple things happening here in the next week that you can participate in. First off, tomorrow on Saturday, January 7th, all day, we have Market Vision 2023. Earningsbeats.com, which is founded by Tom Boley. He's a longtime StockCharts contributor. He is hosting a Market Vision 2023. The last couple of years, we've done this January event, and it's been a pleasure to participate in that with Tom, who's a fantastic analyst on his own right. Grayson Rose and Julius DeKempener from the StockCharts team will be joining me. We'll be sharing some of the charts we're watching. I would encourage you to sign up for that event. You can go to earningsbeats.com to get more information. Next week on this show on Wednesday, the 11th, we have Jeff Hirsch. Jeff is the editor of the Stock Traders Almanac. His father, Yale Hirsch, created that publication and really pioneered the concepts of seasonality that many of us take for granted. We'll get Jeff's take on 2023 from a seasonal perspective. It should be a really fun conversation next Wednesday, the 11th. Next Friday, January 13th, is our StockCharts Market Outlook Special. I'll be sitting down with Tom Boley, Greg Schnell, and Mish Schneider. We'll have a great roundtable discussion on what to expect in the year to come. So a lot of great content to share with you here in the coming week. Let's continue on our show today with a poll. We ask you often on our social media accounts and also on our live stream page. So on social media, make sure you follow us on Twitter, subscribe to our YouTube channel. You'll get these polls as they go around, because I found it's a really interesting read on where your fellow viewers are at. And we asked you, January tends to be one of the strongest months for stocks. Will January 2023 be a positive or a negative month for the S&P 500? Basically, 2 out of 3 of you said negative. So 61% said it was going to be a down month. Only 39% said an up month. I wonder if we did that poll today after the bit of the rally that we saw with the S&P once again teasing 3,900, testing its 50-day moving average from below. I wonder if that would change any opinions in that poll. I didn't vote in the poll. If I did, I'd probably say negative. But again, that's just based on the weight of the evidence up until now, right? The bounce today was interesting because it actually propels us out of this consolidation phase we've been in for the last couple of weeks. You know, we often talk about the Santa Claus rally, and I read an article earlier this week in the Wall Street Journal saying basically, technically, it was a Santa Claus rally, but I don't know about you, but visually looking at the chart, that is not any sort of rally that I've been taught. This is more of a consolidation, languishing sideways phase. Right? This is telling you the market says the S&P is worth about 3,800 points, and that is the case until proven otherwise. This bounce that we saw going into the weekend could be a sign of encouragement going into next week, but I think the levels above where we're at is what's so important. So to have a positive January, you basically need to close January above about 38.20, 38.30. So sort of right around where we're at right now. And I think at this point, it's still very much an open question. So I'm not surprised it's pretty close to 50-50, which is probably where I think there's an argument to be made on both sides of that. Let's continue on our show today with our Wrap the Week segment, though. And what we do on the Wrap the Week segment, a couple different things. We like to start just looking at the weekly returns of what happened. We'll focus a little bit on today's price action and how that relates to everything else. And then we'll finish off getting through some of the charts on my Mindful Investor live chart list. That's a list I go through with my premium members at Market Misbehavior every Saturday. And it's a really, really helpful exercise to try to make sense of all the different inputs we can consider. Let's start with what happened this week. So with today's rally, that means the S&P 500 finished the week not too far above where it started. Now, we had sort of the weird holiday week on here. So hold on a second. I want to make sure we have this correct here. So 4 days would start the clock on the 30th. Perfect. So now we're looking essentially at year-to-date returns in this brand new year. We see the S&P with today's rally finishing the week up 1.4%. Again, Monday was a holiday, so only 4 trading sessions to think about. A couple things outperformed the S&P this week. We have in purple, small cap stocks up 1.8%. Also in blue, this is Bitcoin finishing the week just about the same, 1.8%. Gold up 2.4%. I was doing an interview earlier today. We talked a lot about gold and gold stocks, the GDX, even particular stocks like let's see, R Gold, Royal Gold, GOLD, which is Barrick Gold, Newmont Mining, NEM, all having some pretty nice runs off the lows. I don't know if we're done with that trade yet, and it could eventually all of a sudden magically turn into the inflation hedge we always wish it was in 2022. It actually starting to materialize to the upside. So nice up week, outperforming the S&P. Two things really got it done this week on a relative basis versus stocks. Bond prices were up 5.6%, and right about the same emerging markets. EM was up 5.7%. Now, EM tends to do well when two things are happening, when commodities are doing pretty well and when the dollar is weakening, because a strong dollar kills the returns you might get from the stocks in the EM space. You're not really getting a super weak dollar. It's sort of chopping around quite a bit, but a really good week for emerging markets overall. And I think, excuse me, what I meant to say was we're not really seeing the upswing in commodities yet. They're actually remaining relatively low, but I think the dollar remaining weak is what's allowing emerging market stocks to do pretty well here. Now, a number of things underperformed the S&P. In pink, we have the NASDAQ 100, which still had an up week, but only up about 1%. In green, the U.S. dollar, using the UUP ETF, was up 0.3%. The big loser this week, crude oil prices, down 7.5% today. And I was asked recently about some of the energy stocks, right, which overall setting up arguably pretty constructively, right? It's had some pullbacks, and the question is, do they move higher? And the comment I got back was, well, how much do you want to own energy stocks if crude oil prices are languishing? And my answer was, I want to own energy stocks if the charts are working, right? That is the idea. I find a lot of times down the road, looking back in the rearview mirror, everything makes sense, right? Okay, here's how energy stocks managed to go up, even though XYZ was happening with inflation, with crude oil prices, et cetera, et cetera. But the fact remains, the chart tells you that things are working. And for me, that's way more important than understanding the reasons why the chart is going up. I'm not saying that's not important. And I'm not saying you don't want to do your due diligence and understand what may be driving prices. But if I had to choose between what may be driving prices and the evidence that the price is actually going up, I will vote for the latter 10 times out of 10. And that's why I would encourage you to focus as well. Let's just check in quickly on that last part of the weekly chart and just focus on what happened today. So the S&P with a nice up move. We didn't quite close above 3,900, but we traded above there in the last hour, which is pretty impressive. So the S&P up 2.25%, the NASDAQ composite up 2.5%, the NASDAQ 100 up almost 3% today, which is a pretty strong way to finish this week. After, my general sense of things before this morning was, this is a languishing market. Languishing is an adjective that has come out of my mouth a number of times this week, talking about the market. So we're sitting on 3,800, and let's just wait and see what happens next. This could be the beginning of something meaningful, and I think we wait till next week to see what today actually means. The VIX coming off of it, and that might be an interesting data point to pay attention to. The VIX really didn't move up a lot when the S&P was pulling back off of the 200-day moving average. from mid-December to where we finished the year. So it'd be interesting to see if the VIX actually goes lower, and if it goes below 20, I think that would be certainly a very bullish sign, indicating most likely a nice rally on lower volatility, which we've not seen in quite some time. Bond market's very much a story today, with bond prices up in a pretty big way and interest rates, of course, going down. We had some economic data before the open today, factory orders and some other things. And this is one of those times where good news tends to be bad for stocks, good and bad news tends to be good for stocks. Because bad news means the Fed may be closer to the finish line, the light at the end of the tunnel getting bigger and brighter, and that means the risk assets could have a chance to go higher. So both stocks and bonds having a pretty decent day today, and the dollar index moving lower as well, which is giving space for those risk assets to improve as well. Now, we often talk about gold as a safe haven. If you haven't heard me dispel that myth enough in the last 12 months, a day like today is yet another example of that. Just because stocks or bonds are up means nothing, I don't think, about what gold is most likely doing. I think they're related, but a lot of times move independently. So gold having a pretty decent day and a pretty decent couple months here. And I think that is most likely to continue. Commodities as a whole not doing bad as well. Cryptocurrency, some signs of life, really not following through and getting the percent returns that you see in the equity space, but they're not going down. And I was talking with Julius DeKempener yesterday, who's part of the StockCharts crew, and has focused more on cryptocurrencies in the last year or two than I certainly have. But I've enjoyed a lot of conversations with him, and we were laughing that what would we need to see to feel better about cryptocurrencies as a space? And our first initial thought was, well, they stop going down. That would be a good place to start. And we may be doing that here as we consolidate and move higher. We're not really getting that upside follow through. Bitcoin still below 17,000, touched it earlier today, but not getting above there. Ether still below 1,300. Let's wait to see if some of those key levels are eclipsed. Just to finish off today, you see materials up 3.4%, technology having a nice leadership day, up almost 3% as well, and REITs third from the top, up 2.9%. What underperformed today? You had healthcare up just under 1%. Some of those healthcare charts have been some of the better places to be, certainly in the third and fourth quarter. We'll see how that continues into the new year, but today underperforming quite a bit. Communications services up 1.6%, energy up 1.9%. Just to finish off, shall we look at the Mindful Investor live chart list? This is a group of charts that I keep updated on the StockCharts platform. If you've not seen this group of charts, you've not watched the show before, if you go to the articles tab, I just published an article talking about the S&P 500, looking at trend and momentum and thinking about key levels to focus on. So if you go to my articles page, you click on articles, go to the Mindful Investor, you'll see a gray button at the top of that page to go to this chart list. And again, it'll reflect my latest notations and anything. I don't annotate it a ton, to be honest with you. Market trend model, just we'll have to finish here for time, but just to let you know, the market trend model, one change today. We almost had the medium-term model go back to bullish. It was really, really close. We're going out to 2 decimal points, but remaining bearish after last week, turning bearish for the first time in about 6 weeks. Short-term model, though, today turning back positive. The strength that we saw in the S&P moving to the upside caused that to happen. So long-term bearish, medium-term bearish, short-term bullish for now. Folks, let's take a quick break. We'll be back answering your questions from the Final Bar mailbag. We'll see you in a minute. Hey guys, Dave Keller here with StockCharts.com. Thanks so much for joining us here every weekday for the Final Bar. It's such a pleasure to be back live with you after a great holiday break. Hope you guys are all doing well and staying safe. We have so much good stuff planned for the Final Bar. As a team, we met yesterday, have a strategic plan for the year. We're going to be in our studio, which is about 10 to 15 feet from where I'm sitting right now, very, very soon. So it should be a lot of fun. We're excited to expand the scope of the Final Bar and bring on more guests and more great segments to help you make sense of these markets. So a lot of good stuff to come. But for now, we have a lot of great ideas to share with you for sure. A couple quick announcements before we get to our next segment. First off, we welcome your questions. We're going to do a mailbag segment here in a little while, and we'd love to feature one of your questions live on the air in our next mailbag segment on Tuesday of next week. You can get your questions to us via email, thefinalbar@stockcharts.com. We're on Twitter @FinalBarSCTV, and we're on YouTube. Put a comment below the video you're watching on our StockCharts YouTube channel. We'll gather all those questions and hope to answer one of yours live on the air on Tuesday's show. Also, go to StockChartsTV.com. I am super proud of my fellow StockCharts contributors, provided a lot of great year-end content to try to help you make sense of things. We've had some really cool market outlook content we've been putting out. Larry Williams put out his latest market outlook earlier this week. All of that content is available for free at stockchartstv.com or on your mobile device. Just search for StockCharts TV on demand. Let's continue on our show with the next segment, Power Up. What we like to do every Friday is just share with you one of the features, one of the many great features on StockCharts.com, one of the things we feel that you may want to be familiar with. Today, I'm going to highlight one of the features from our Camino release, which actually was in mid-December. If you missed it because of the excitement around the holiday season, we have some new functionality on our platform. To see it, if you go to Charts and Tools in the header at the top of our StockCharts website, look for the little new indicator, and you'll find we have options data. You'll find we have a new earnings calendar. We have a sample chart gallery and a bunch of sample scans that we've been adding to our platform. It's just some of the things we've added in our most recent release. I wanted to highlight for you today our earnings calendar. Now, we've been showing you earnings on our simple summary page. So if you bring up an individual stock, you can look at the simple summary and see some limited fundamental data. You can see earnings releases, more info about the company as a way to enhance your analysis of the companies that drive the stocks and the prices that you're analyzing. But we really wanted a way, one place where you could look to get upcoming earnings and think about what earnings have come out recently. So if you go to the earnings calendar, you'll see two tabs at the top. It's going to start off on the reported earnings, and it's just going to start with the last 2 days. You can click on that drop down to bring in some deeper periods of time if you want to do a deep dive and look for specific items. Upcoming earnings, of course, is going to start today and look forward. So if you want to think about over the weekend who's going to be reporting next week, this is a really good place to sort of jot down what names and what tickers may be of interest to you. You'll note a couple other things on the upper right. If you're looking for a specific stock, easiest way to do that is just to go up to the right, type a ticker, type the name of the company. It will immediately help you find it within this table. If you know someone's reporting in the next week or two who's trying to remember where that is, that might be a good place to do it. You also have some ways to interact with this info. Of course, you can get a little preview chart of each of the tickers. If you click on the little dots to the left of each of these tickers, you can get to all of your charts to analyze them a little more deeply. To the right, after we tell you when they're reporting and if we know if it's before or after the market, that is always subject to change. Of course, companies have a tendency to move things around at times. But to the right, you'll see you can add these an individual stock to a chart list. You can also set a price alert. So if you know a company's reporting earnings, you want to think about a particular price level after you analyze the chart. You want to make sure you remember a particular level. So if earnings come out, the stock breaks up above this level, then it's a buy, for example. Click on the little alert button. That'll bring up this dialog so you can set an alert and email yourself, send a text, have it pop up at the top of the site for you, all of the above. This calendar and the ability to analyze earnings is just the latest step in a series of steps we're going to do to add more fundamental and earnings data to our platform. We have a lot of really good plans to incorporate more and more of this content into our scanning engine, allow you to chart a lot more fundamental data, and we will get to it as we go through the course of this year and have further product releases. So congrats on the ability to now use our new and updated earnings calendar available to all of our StockCharts members. Let's continue on the show with our Final Bar mailbag. As a reminder, the mailbag is always open. Just send us an email at thefinalbar@stockcharts.com. And let's go to question number one. Dave, what is the best way to determine a change in relative strength between any two factors or sector ETFs? And you asked, we went on further and said, I know about the scooter scores, I know about the RRG, but I'm curious how you think about relative strength between two different instruments. And I would say, I think you hit on a couple things that are pretty meaningful. So for example, if you bring up a stock like Electronic Arts, which is kind of a choppy, annoyingly sideways stock, some of my friends here, let's see, Greg Schnell comes to mind as a good example. I'm not sure if he has a scooter. I'm pretty sure he does. Yeah, so Greg's charts, and this is one of the charts that Greg Schnell uses. He's one of our StockCharts contributors, of course. You can see he actually likes to chart the scooter rankings on the chart itself. So where that's helpful when you think about it is there are a couple different ways to think about relative strength, how this particular thing is doing relative to other things, right? How is this stock doing relative to other stocks or ETFs? You can look at just the regular relative strength, which is the purple line, which is this stock relative to a benchmark. You can look at the black line, which is the scooter ranking, because the higher the StockCharts technical ranking, the better it's doing relative to its peers, right? So looking at a large cap or a mid cap universe or a universe of ETFs, how strong is this trend relative to all the other trends in that space? So I would argue both of those. If you look at two different stocks and compare their scooter rankings, and one is ranked 80th and one is ranked 50th or so, there is a general consensus or a general conclusion you can draw about the strength of the first one with a higher scooter ranking. I think that makes sense. I think you've hit on something a little more fantastic with the RRG, which is basically thinking about two different ETFs and how they're related. So if you're looking at the XLY representing consumer discretionary, which is down here in the lagging quadrant, you compare that to the XLP, which is heading northeast in the leading quadrant. Looking at the relative movements of two different things on the RRG can be really, really helpful. And it's not just where they're at. It's the length of the tail. It's the direction of the tail, whether they're heading northeast or southwest, which is what I tend to look at. What quadrant are they in, and is that changing? These are all things I think that help you differentiate one or the other. And as a reminder, at the top of the RG, you can just hand enter different tickers. These are all driven mostly by pre-canned groups we've created, but you're welcome to look at your own list of stocks and just put in a couple stocks and see how they line up relative to one another. So I think that is a legitimate way to do it as well. To be honest with you, though, a lot of the work that I do is just looking at price ratios beyond everything that we just talked about. I like looking at two different sectors or two different themes. And the good news about ETFs is we have a lot of price data on a lot of different thematic plays, a lot of different passive indexes, sector and industry groups, and also broad global equity indexes, right? Every one of those, and even commodities and currencies and bonds, all represented by ETFs that we have good data for. So you can look at a ratio of one versus the other, and it's very simple. If the line is going up, the numerator is outperforming. If it's going down, the denominator is outperforming. And going through a series of ratios can be a very instructive process. Part of my normal process every week is going through this list of ratio charts where I actually go through all of these are just simple lines like this, comparing one versus the other. And working at Fidelity with our asset allocation team, we spend a lot of our time just thinking about ratios, thinking about the relative strength of one thing versus another thing. So I think you are in the right track with what you mentioned with the scooter rankings and the RRG. I would go with ratios and do a ticker, a colon, and the second ticker, and make sure you are aware of what is working relative to other things in your space. Great question, and thanks for that. Next question. If we were to have a range-bound sideways market for 2023 and maybe even beyond, how would you trade that? That is a fantastic question. I love that so much. And it's funny. He's talking with Dave Landry, who's a StockCharts contributor. We were talking just before the holidays, and I was laughing about, I was going through my office as part of my normal year end, try to get my office, cleaned up a little bit. And I found this book, that quote unquote book that Dave published. And it's literally like a 6-page printed out, folded up half size piece of paper. And it all has the titles. It's registered, so you can see the copyright, and it has 3 pages. It says uptrend, and it has an up arrow. The second page is downtrend with a down arrow, and the third page is sideways with a sideways arrow. He even has that tattooed on his arm, and I'm not kidding. If you see him at a conference, ask him, and he will gladly show you with a goofy smile on his face. They literally tattooed it on its arm. He always says it's simple, right? Just look at the trend and focus on the trends. Now, the reality is we love to think of things in binary outcomes. Is this bullish or bearish? Is the market going up or down? Is this chart a thumbs up or a thumbs down? But when you're looking at the S&P for the last 6 months, you could make a bearish case on the long-term trend overall, pattern of lower highs and lower lows, a clear downtrend channel for the last 12 months. I don't think that's debatable. In the short term, you could argue that October was the low, and now we're putting in a higher low. And isn't that the beginning of a further recovery? Maybe today is the beginning of a rally above 4,100. That could be how it plays out. But if you look at where we were at in May, and you look at where we're at today, those levels are identical, right? From mid-May to mid-January of 2023 or early January, we're at the same place, right? We chopped around quite a bit. We're not really moving directionally. Having said that, there are charts that look fantastic. There are stocks that are going up. Look at European banks or Japanese banks or U.S. insurance companies or healthcare stocks or consumer discretionary names like Ulta and many, many others that are in clear uptrends. You also have stocks that are going down like Tesla and Amazon, both around new 52-week lows at the same time. So what I would do in a sideways environment is focus less on exposure to the S&P or the Qs or the diamonds, broad passive indexes. And I would focus as much as possible on identifying the areas of the market that are going to do well and have been doing well, given the fact that the market has been languishing. And there are charts that are going up while the S&P is going sideways. I would start with that list of stocks. That's how I would think about it. Next question, which will have to be our final one. You mentioned, Dave, short-term divergence between the S&P and its advanced decline line. And your question is there an objective point where you consider a divergence significant? And you went on to say, are you waiting for a price to move to a certain point to confirm the divergence? And thanks for sending the chart that you were asking about. It's this one here. And what's funny is it actually fixed itself today. Because if you look before today, when I was getting these questions ready yesterday at the end of the day, the S&P is sort of drifting lower a little bit, sort of chopping around that 3,800 level, but you saw these advanced decline lines rotating higher. It's so interesting that since you asked your question, the market today moving higher, almost feeling that positivity from individual names. That's a key takeaway, I think, on this type of chart is looking at the trend in price and thinking about the trend in the advanced decline line. The fact that the advanced decline line has been going up clearly in the last couple of weeks, while the S&P has clearly not been, it's been languishing. That tells you something. That tells you that there's underlying strength that's not being reflected in the chart of the S&P. Today, you're actually seeing them now start to agree. And maybe I think you're onto something. The kicker is, though, that's a very short-term time frame. And for me, I tend to think a little longer term than a couple days. I'm usually thinking more along the a couple months time frame. Having said that, thinking about these multiple timeframes and what the short-term strength might mean for the ability of the market to make sustained gains over the medium term and long term is very well founded. Thanks so much for that question as well. We, folks, need to wrap this show and go to the 3 and 3 charts in 3 minutes that tell the story of this market environment. Let's get to chart number 1. I've been asked a lot about volatility, and I was doing an interview earlier today where people were asking about the VIX and why VIX wasn't moving higher. My comment to them was, if you think about what the S&P 500 has done, it's really consolidating. As much as we want to say, is it going up or going down? Is it bullish or bearish? Arguably, the trend in the S&P for the last 6 to 8 months has been sideways, noisy and choppy, but we really haven't made any headway to the upside or the downside. Overall, in the last 6 weeks, we've settled in, right? The S&P chopping around that 38 to 3,900 level and the VIX remaining fairly low. So the fact that the market was rallying with the volatility really not increasing, with the fact that the S&P came off its high in early December and the fact that volatility did not spike is kind of an interesting development. Usually the market moving higher, the volatility going up. It happens when the market is going down. When the market goes higher, the VIX should be going down, which means when the market is going lower, the VIX should be going up. And that really didn't play out. That tells me we're sort of in a quiet consolidation phase as volatility has settled in. We're in a wait and see mode to see which way we break. I don't know if today is enough. I'm more looking at 3,800 to 4,100 as that range. And again, my article on StockCharts.com just posted here in the last couple minutes, I believe, goes into that in a little more detail. So make sure you check that out over the weekend. Chart number 2 is Schlumberger SLB. When I'm looking at the energy space, this is a pretty classic breakout retest type of chart. And what I mean is you have an established level of resistance. This is the high from June of last year. We rotated back above that level in October. We then pulled back, and you can see that resistance around 48 now becomes support. So the breakout level becomes the new support level right at the 50-day moving average. We're now rotating higher, and SLB is very, very close to making a new 52-week high. A chart like that, I think, regardless of the environment, deserves a vote of confidence. Should that go up if oil prices are not going up? Maybe, maybe not, but I'm worried a lot less about what oil prices mean for SLB. I'm worried more about the fact that SLB is going up, and I want to own stocks and charts where the relative strength is improving, and SLB, I would argue, sort of fits that mold. Final chart of the day is Amazon. I have to, contractually obligated to highlight bullish momentum divergences, whether or not it agrees with my overall assessment. Chart like Amazon, I am very skeptical on something like this working just because it's making new lows, and I don't enjoy buying new lows. However, the November low to the December low, look at the momentum. Oversold on that first test, not oversold on the second one. That is a bullish momentum divergence. Folks, that's a wrap for this show. Thanks so much for joining this week. We'll be back live Monday. Have a great weekend, and we'll see you then.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.